Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 6th of July. Starting off with Energiser, which has had quite a lot of backing on social media for various reasons. Current situation is that we're just trying to get through this 200-day moving average at 0.8 pence. Just peaked at that so far today and on Friday. End of day close above 0.8, and the upside here could be up to 1.6, 1.65 over the following few weeks. Stop loss at this stage really back below 0.6, but obviously 0.5 has been the lowest in recent months, so not a difficult one to work out the money management on. Been a few false starts on Gfinity as the e-sports area didn't quite get the enthusiasm that it deserved, perhaps before COVID took off, but now we've broken back above the 2 pence level in a decent way, which has been the resistance before, 2 to 2.5. End of day or end of week close above the 200-day moving average, 2.47, should be enough to finally take the shares up to the top of that rising February trend channel, approaching 5 pence over the following month to 6 weeks. Stop loss at this stage back below the 50-day line, 1.66 pence. I doubt if it'll go back below 2 pence if this is a genuine move to the upside, with a little golden cross there between the 20 and 50-day moving averages, which helps inspire confidence. I don't think I've looked at Longboat Energy. I should have previously, but broken this line of resistance there from January around 82 pence, and while we're above that, looking for a top of December price channel target as high as £1 at 25 pence plus. And time frame on that, the next, I suppose, 4 to 6 weeks at the most on that situation. Also got a golden cross there between the near-term moving averages, which is a plus point. Going on to Modern Water, which has had its fans in the past. The good news here, I suppose, is that we're still building from that gap through the 200-day moving average at 1.25 pence. So at the beginning of May, never went below that gap, and had the 50-day moving average currently at 1.77 to guide the shares higher, while we hold above the 50-day line, looking for a top of May trend channel target as high as 3.5 pence, perhaps as soon as the end of next month. Plutus Powergen is the next contender. Here you can see that got the shares pushing higher, or gapping higher, in fact, I think above the 50-day moving average is one of our favourite buy signals. In fact, an end-of-day close above the a rising 50-day line is a buy signal, so we had one of those on Friday, and the gap higher today, so double fun for the bulls at the moment. Rising trend channel that you can draw through the 50-day line, and then the top of the channel heading towards 0.16, which is the big target there over the next couple of months, one would hope and assume, and that's valid while we hold above 0.05 pence. Stock for the shorting conspiracy is next. Comes in the form of Powerhouse Energy, and very strong chart here, especially since I suppose, way back in February really, but we've had this sort of step higher, particularly step higher price action, particularly since April, where you have a rise, then a sideways move, then another rise, sideways move, etc., etc. Went a bit choppy the early part of last month, but again, we're going back, reverting to that ultra strong price action of a move higher, sideways, and then up. We had a previous target here of 5.5 pence, which is the top of the rising trend channel from April. The target after that, which could very well be hit over the next couple of months, is 8 pence, which is the top of a rising January trend channel. Stop loss at this stage back below, probably wouldn't even see the shares below 3.4, which is the floor of that channel from April, just below the 20-day moving average at 3.5. So looking pretty set fair on Powerhouse Energy. Stock which was, I suppose, ready for people who like high-octane situations, but just wanted to point this out, Ceylon Capital, just in the sense that at the moment we have a notional stop loss there, I suppose, on the whole bull argument, or the buy argument of 1.4 pence, which is the 20-day line. Still haven't filled that gap there from the middle of last month, which is a positive as well, put in a higher low, so that's a sort of rocket launcher formation that I mention now and again. Ideally, there's an end-of-day close today back above the neckline resistance, initial July resistance at 2.4 pence. So just watch out for that. If we can remain above that with the inside day breakout that we've had, then there is a chance of retesting the best levels of the last few weeks. But as ever, the stop loss should be strictly enforced, and that would be back below the 20-day moving average if you can afford that at the moment. Next stock, relatively obscure, but looking interesting in terms of the latest price action. ULS Technology, broken that downtrend line from the middle of last month around the 48 pence level, and also broken above the 200-day moving average at 51 pence. End of day close, end of week close this week above that 51 pence area, and we're looking at a best case scenario of the next 2 to 3 months of the shares hitting the top of a rising January trend channel as high as 85 pence, which would be quite pleasant given the time it's taken for the shares to rehabilitate themselves from the March floor. Seems to be chatter everywhere about Vast Resources. Probably the chatter is rather stronger than the price action so far, in the sense that we haven't quite broken out. But the positives here at the moment are the way we've got a rising 200-day moving average and a nice little bull flag there above the 20-day average at 0.21 pence. Easiest thing here really is to wait for an end-of-day close above that resistance line from February, which is at 0.26 pence. End of day or a weekly close above that should finally give the bulls what they're praying for and telling us that's going to happen any day now, which is a move towards the top of that November trend channel at 0.47 pence over the following month to 6 weeks. Finishing off with a stock which I've been asked about in terms of whether it has any bullish credentials or not, or enough to warrant getting into the stock. We have actually broken for Xeros Technology that line of resistance from the beginning of last month. We did that on, Thursday, or just above 1.1 pence. Current view is that while we're above 1.1, looking for a best case scenario target as high as the top of that rising trend channel from March at 2 pence. Ideally, we get an end of day close well above that 34-day moving average at 1.3 pence, or at least an end of day close above Friday's high, just around current levels, just to prove the stock's bullish credentials. That's it from me today. More updates tomorrow.